Good morning, everybody. Welcome to this webinar brought to you by Wellford in collaboration with Macquarie. Today, our session is going to be about Beyond the Stock, leveraging warrants and technical analysis in the US, Hong Kong, and Japan markets. So welcome everybody to this session. My name is Shane Chu. I'm the moderator for this session. So it is a Saturday morning. I applaud you for being here on time. Now, I know that you take time out of your busy schedule, weekend time to be with us today. So we promise you that we'll do our best in this session to make it well worth your time. So today, our session is going to be about the technical market outlook for the US, Hong Kong, and the Japan market, then followed by a session with Liana from Macquarie to talk about how do you use structural warrants to gain exposure to this market. So we all know that the US market and the Japanese market have broken new high, right? And it looks like the momentum could still be here. So the key questions that linger in investor mind would be, are these markets overbought right now? What is the outlook like from the chart's points of view? Can I still go in to chase the high? So joining us in this session will be Yongji YC from the Shareware Consulting, who will dissect the charts with us to tell us his view about the markets. But before he share about his view, he also talk about his trading strategies. Okay, so we'll hear from Yongji in a short while. All right, so before we begin, as usual, disclaimer, whatever we share in this session is only for educational purpose. So in no way that we give any recommendation for you to buy or sell any listed securities that we mentioned here. If you decide to make any investment decisions, you're 100% responsible for all your investment risks. Now, allow me to briefly introduce our first speaker today. So the first speaker will speak for about an hour, followed by the second speaker from Macquarie. So YC is the founder and chief trainer for Shareware Consulting. He is also a dealer representative with TS Securities. He applied technical analysis in his trading, mainly focusing on share movement analysis, price volume analysis, indicator, candlestick formation to observe the buying interest and selling pressure and further justify the key supports and resistance level. His forte is in understanding the movement of buyer and seller through the distribution area of banker chips. YC is also a regular speaker for a number of financial institutions to train their clients in trading. They include Kenanga Investment Bank, Macquarie Capital Securities, Malacca Securities, and TS Securities. He was also invited to speak for Investing Note and SGX, as well as other tertiary educational institutions such as UTAR, TAR UMT, and UUM. Now, having 13 years of market experience, YC has trained more than 2,000 students with a trading strategy from 2019 to 2021. So academic-wise, YC completed certificate and professional level from Institute of Chartered Accountants in England and Wales. He also passed level 1 of Chartered Financial Analyst, CFA. So today we are very honored to have the founder and chief trainer for Shareware Consulting to join us today, Mr. YC Chin. YC, how are you today?
Yeah, good. Hey, good morning, everyone. Okay, so
all right,
cool.
Yes, I will just stop sharing my screen and hand over the control to you. So the floor is yours until 11 o'clock.
Okay, thank you. Let me share my screen first, yeah. Okay, is it all good?
Yes, we can see your slide.
Okay, so good morning, everyone. Thank you for your time today. So I will start sharing my techniques. Okay, so some of you might have already know me earlier. I'm more focused to the technical analysis part. Okay, so what is technical analysis? Technical analysis basically is demand and supply. Okay, it's demand and supply. So when the demand is there, the price will go up. When the supply is there, the price will go down. So basically, it's as simple as that. Okay, so if we go in further, so we analyze technical chart of the particular stocks. Okay, so we want to know what is the possibility of the movement of the share price. It will go up or it will go down. So from the chart, we can know the market behavior. Like people is buying, is the volume increasing, or is the pressure getting more, getting bigger? So this is what we analyze. This is what is a technical analysis. So we not much focus in the fundamental side, which is the company background, company summary. You just see whether this stock or this thing like underlying anybody is buying it, or like the buying force, whether it's like able to overcome the selling pressure. Okay, this is what we analyze. Okay, so the technical analysis is started back in the 17th. Okay, so 17th century basically is like founded by a Japanese. That time they use it to analyze the movement of the rice, the price of the rice. Okay, so until today, technical analysis is used to analyze, the stock price, maybe forex, crypto. Okay, a lot of things. So usually we got different charts, but the one that we usually use is the candlestick chart. The candlestick chart. The line chart is very simple. Okay, it should already tell you like how the price move, but the one usually we use in a 1 minute chart. 1 minute chart we will use that. But for those that day trader, trend trader, momentum trader, we will suggest them to use the candlestick chart. Okay, we can see the movement of the stock price easily. Okay, so if you are trading, it's like in the lesser interval one, like maybe 5 minutes, 1 minute, then you can use the line chart. Okay, so basically, some of you have already had the knowledge of the technical analysis. So this one is a very basic one. So we have to understand this first before we go into the case study. So in the case study, I will guide you through with the indexes movement and also some of the underlyings of the Hong Kong stock. But before that, we have to know the strategy that I'm using. So for this candlestick formation, usually, like there's only green candle and also the red candle. Okay, the green one, basically it means that the price is going up. Okay, the price is going up. Okay, then for the red one, means that the price is going down. Okay, as simple as that, as simple as that. This one is a very basic one. So for this is the interval that I just mentioned. Okay, usually we will look at the day chart. We'll look at the day chart. Okay, you can see the 1 day one. Okay, so if you want to confirm the trend, let's say you want to hold it. Okay, you are a trend trader, you're a momentum trader. So you can also check the weekly chart. Okay, the 1 week one. You can also check the weekly chart. Okay, so for the monthly chart and the yearly chart, I wouldn't recommend. I would say you can just ignore. You can just ignore. Just it hides a lot of information in between already. So you cannot see much information from there. Okay, the monthly chart usually just for our technical analysis exam purpose, like when we went to the exam, those examination question, they will use the monthly chart, to test you on the knowledge of those like US movement kind of thing. The one they're using many years back data to test us. So the one is, I would say, is more towards examination purpose. But in the actual trading, I would suggest you use only the day chart, weekly chart for the trend. For the short term one, let's say if you want to trade those like structural warrants, okay, structural warrant. For example, the HSI warrant. Okay, later this part, Liana will cover. So if you want to trade that, you can look into those like smaller time frame one. For example, like I said, the 1 minute one or 5 minutes, 15 minutes. Okay, so I will skip the 30 minutes one. Okay, and most I will see the 1 minute, 5 minute, 15 minutes, hour chart, day chart. 4 hours one I will also skip. Okay, so this is our how we use the interval to know the short-term price movement. Because if you're trading the structured warrant, we wouldn't, some of us, we wouldn't want to hold. We wouldn't want to hold like longer than a day. We want just to settle within the day. So we will see the shorter time frame one. Okay, so all good. If all good until here, comment a 1 for me. Comment a 1 for me. Okay, because this part I want to show like how important is the interval. Okay, so later until the Liana part, you will be able to know how to trade the HSI. Okay, HSI warrant. Okay. Okay, So this one is just like, 5 minutes candlestick and also 15 minutes candlestick. You combine the 5 minutes candlestick, like three 5 minutes candlestick equal to 1 15 minutes candlestick. Okay, this is just a combination. Okay. So we come to the support and resistance. This one basically is a very important one. It's the very, very simple but very important thing. Okay, so if you are, for example, if you want to learn something out of today's topic, if you, I will guide you through the breakout strategy as well. But if you cannot get the point, at least you have to know what is support and resistance. Okay, so basically this one is the point of buying and selling. The resistance is the point of selling. Okay, means that like just now, first starter, we said basically is supply and demand. So the supply zone is the resistance zone because a lot of people they're supplying their share there. Okay, basically they want to sell their share there. Okay, so in this case, price will drop when it hit resistance because when it goes to resistance, a lot of people they see the chart. Okay, they know that okay, this point is the previous resistance, is the previous high, for example. So people will think that okay, might as well I just sell it or I sell partially. Okay, so in this case, more and more people they will start selling their share. So this is where the resistance comes. Okay, it's like people follow people. Like I see this price cannot go up already. It stopped halfway there. So I will feel like, might as well I just secure my profit first. So I will sell. When I sell, the price is even harder to go up. So other people also follow. It's like people following people. The same as the support zone. When it comes to the support zone, means that people think that this point is the point where the price is already cheap enough. They want to buy. So when the buying order comes in, okay, they absorb the selling pressure. So the price no longer dropping. Okay, so when other people see, until this zone is no more dropping, so they will join in as well. It's like people following people. This is the point of the buying and selling, which is support and resistance. Okay, so let's see. When the support is broken, it will become the resistance. Like for example, as this zone, just like what I shared. At this zone, let's say a lot of people they're supporting the price. They think that this point is very cheap, so they went in and they supported. Okay, so until one day, the selling pressure getting too big already. Okay, so the stop price crash. Okay, so this previously support point, it will become the future resistance. It will become the future resistance. Why? Because when the stop price crash, okay, when it bounce back, those previously who bought there, they want to escape already. They want to exit. So earlier they supported, now back to their back to their cost, they want to exit. Okay, so the previously support point will be the resistance when it broken. The same as the resistance point when it broken, it will be the support. It will be the new support because the resistance, like just how we shared, a lot of people want to sell there, right? So until one day, we imagine until one day, the selling pressure is getting lesser already because the buying power able to absorb all the selling pressure. So this is where the point is like the resistance is changed to support. This is how it changes. Okay, so the very important part of the technical analysis basically is this part, the support and resistance. It's very easy to check. Then later I will show you the chart. I will draw to you all. So it's very easy to know where is the support, where is the resistance. The most touch point, meaning a lot of people they traded there. The most touch point will be the support or the resistance. Okay, so if you're able to understand this part, right, resistance and support, comment a 2. Okay, comment a 2 for me so that we can go to the breakout strategy. Okay, so this one is a more important part. Okay, it's very easy and very important part because this is where the basic comes up. Okay, good. I see a lot of comment. So this one is a trend. Trend basically is only 3 types. Okay, uptrend, very easy, very obvious. The price is going up. Okay, even though in between it retraces. Okay, even though in between it definitely will retrace a bit, but overall it's going up. Okay, you can see from this chart, like the price confirm cannot like keep on going up. It must stop somewhere, retrace a bit, to recharge. Then after that, continue to pump. Okay. The other type of trend is the sideways trend. Sideways trend. Sideways trend, we can see from this chart. It's very simple. It means that the price is not going up or it's not going down. It's just going sideways, consolidating. It means that this chart or this stock, it has not found any direction yet, like direction of going up or the direction of going down. So it's basically like finding way of direction. So you can say it's like no up, no down, just sideways. This is the other trend. The last one is the opposite of uptrend, okay, which is the downtrend. Okay, so for the downtrend one is the same as the uptrend. Usually it wouldn't keep on going down. It will go down a bit, crash a bit, then rebound a bit. This is where the dangerous part is. Like when rebounding that time, a lot of people they want to chase one. They feel like, oh, coming already, they want to chase. But if you are not good at the risk management, okay, when it rebounded, after it rebounded, then it will continue to go down. Okay, because the overall trend is a downtrend. So overall trend is a downtrend. So downtrend, you want to, buy the dip. You want to catch the rebound kind of thing. You will need to be very careful. Okay, you will need to monitor the support zone. Okay, let's say a stock, when it touches the low point, then it start rebounding. So if you want to chase, if you want to buy, the lowest point will be your support zone. Okay, when someday it breaks the lowest point, then you should have exited already. But a lot of people, they when they buy in, they feel like, okay, I want to earn. So when the price continue to go down, because it's a downtrend stock, even though the support is already broken, they wouldn't want to exit one. This is a psychological mindset, because people don't want to make losses. They say, okay, maybe I hold for a while, I hold for a while. Maybe it will continue to rebound. But in fact, usually, if you cannot control the risk, usually you buy the dip, you will lose a lot. Usually, I would say usually. I also sometimes will see those stock which crash a lot. Then I will check the support zone. I will also make some entry, but I will control my risk very well because I know this one is a downtrend stock. Okay, what I want to earn from it is just the short-term one. I want to catch the opportunity due to the panic selling. I know very clear. This is what I want to do, but I'm not like a holder. Like when it break my support, when it exceeded my risk, I still holding. It will be very difficult because like the risk and reward is not balanced anymore. So we will suggest if you are new one, if you're a newbie or you want to be preset, we will suggest you to just focus on the uptrend stock. You focus on the uptrend stock, like I just mentioned, because when the price go up, it will retrace. Okay, it will retrace. This one is the healthy retracement. We call it healthy retracement. So after the healthy retracement, probably T3 or T3 retracement, okay, then the price will continue to go up because the trend is still there. So if you are a newbie or you are a trend trader or you don't have the much time to monitor the market, we would suggest you don't buy the downtrend stock because downtrend stock is just to play the short-term rebound, maybe just 1 day, 2 days, or 3 days. Okay, so if you are a holder, you don't have much time to monitor, you just buy the uptrend stock because even though you buy, you might have bought a little bit high, but after 3 days time or 1 week, it might have the chance to continue go up again. Easier for all of us. Okay. This one is the breakout. This one is a breakout one. So usually I'll buy the breakout because breakout it means that the trend is overall coming out already. Okay, but people they tend to buy the dip because they feel like seeing the price. Okay, from the peak maybe one ringgit. Now maybe like 70 cents or like 60 cents. They feel that it's cheap, but it might not be the case because you have to see the support from the chart. Cannot like I feel it's cheap, then I buy. Okay, so I would suggest you buy the uptrend one. Like this one is breakout stock. You just focus on those uptrend one. Easier for all of us. Okay, because not all of us is a full-time trader. Like trading is my kind of like my job lah. Okay, so I can focus on monitoring. Basically, 9 to 5, I'm able to monitor using phone or laptop or desktop. But a lot of us, have the full-time job, so we wouldn't able to monitor like me. So I would suggest you just focus the trend. Trend is our best friend. Just focus on the uptrend stock. Okay. So like just now I said, focus on the uptrend. Then how do you spot the entry point? Is the breakout. Okay, breakout is the entry. It's the point that this stock might be coming. I wouldn't say it will be coming. I said it might be coming because there's no 100%. Like first started when we share about the technical analysis knowledge, we say it's all about possibility, supply demand, and the possibility of the movement of the price. It's about possibility. There's no 100% one. For all these years when I coach those, even though it's an institution client or those university students, I will tell them very honestly, there's no 100% in the market one. If someone tell you 100%, this stock will be going out, this one you don't listen, okay? Because even me, until today, I will share very sincerely, I will share very honestly. It's all about possibility. Just that the possibility is high or the possibility is low. Okay. So the breakout stock, these are some of the formation that I will show later. Okay. So breakout is basically okay, it's all linked. It's all linked. Like when we first started, we share about the support and resistance, right? So the breakout means that the resistance is broken. Okay, the resistance is broken. So that's why we have to share about the support and resistance, the reasoning behind it first before we come into those techniques. Okay, so that all of us will be easier to understand. So for this breakout trade, it means that okay, the resistance is broken with increased volume. Usually we will say best case is that the volume has to be bigger than previous, like before breaking the resistance, because it means that this one is the real breakout. Is the real breakout, because the real breakout, it comes with increased volume, because the volume, it wouldn't cheat. Even though the banker want to cheat, they still need to really trade the volume one. Means that they really need to have some trades over there, right? Okay, they want to spend money there. They want to lose some brokerage fee kind of thing. They still have the cost of creating those volume. Okay, so the volume is the so-called is the real thing that we can see from the chart. Okay, if some of the breakout, it comes with very small volume, the one basically is that we call it a fake pump. A fake pump, meaning the banker just trade 300k ringgit, 300k volume, then the price go out by maybe 4 to 5 bips. The one is a fake one. We wouldn't much like that. Okay, we like the one is like, okay, like the seller side is a lot of people queuing to sell because the resistance zone, like I said, the supply is a lot. Okay, so until a point, okay, somebody eat out the seller. This is the point that we like. This is how we see the real breakout versus the fake pump. Okay. So this is one of the example. You can see when the resistance zone, so basically when it start breakout, okay, some of you, if you are experienced one, you might ask, hey, why don't you focus on the breakout on the highest point? This one is just a body. Okay, it's just a body, it's not like the peak. The breakout, some of them, they see if break out the peak point, only they will consider it as a breakout. But for me, I will see the body. I will see the candlestick body, which is the closing price and the opening price, so that you can easily spot an early breakout like this. Okay, if you focus on the peak, okay, so you might only enter the next day, which the price already went up by a lot. Okay, so I will focus on the body. I like to check the body resistance, the body candlestick resistance. Okay, closing price, opening price. The one for me is make more sense, because opening price, closing price, these two prices, more people traded. If you notice, like for example, opening that time, 9 o'clock, or like 4:50 when closing that time. Okay, more people traded there because it has got the pre-opening session and also the pre-closing session. A lot of people will queue there and match and get matched, even though those funds. Okay, so the volume there will be bigger, and the closing and the opening price will be the one of the major reference for those traders. If we see the chart. Okay, so this is one of the another example also. So although this one is not like broken the previous high yet, but we can see from the base, from the yellow color base zone, it has already come out from the base zone. So this one for us, we know that, okay, the momentum is coming. We can know the possibility of it going up is higher. Cannot say 100%, but we can say, when it starts to come out of the yellow box, okay, we can feel that, okay, the momentum is coming. Okay, that's why if you see this type of breakout, you can try some entry. Okay, you can place some entry point. Don't all in. Like I always share to our members or those clients, you will say you buy or sell in batches. Like for example, after the stock price has broken out of the yellow zone, if you feel that the possibility of going up is higher, you can try a bit. You can try maybe 30% of your position first. Okay, when it stand firm, you can add another 30%, for example. Okay, or at least you want to be easier, you can just do two trades. You can buy 50% of your position first. Okay, so let's say if you want to buy 100K, you buy 50K first. So easier. This is how you make the entry. Okay, it's not like all in. If you straight away all in, when the price retraces by a bit, you will feel scared already. You will feel scared. Okay. So this one, I will share 3 types of pattern, which is the breakout patterns. Okay. So this one is one of the breakout pattern is the ascending triangle. Basically, I wouldn't much encourage people to memorize the name, to memorize the formation's name. Because for me, most importantly is that you need to understand the logic or the reasoning behind the breakout. Okay, like this one is the ascending triangle. Then later got another maybe a raising channel breakout. Got a lot of different names. Some of you might have already heard before, like those like cup and handle breakout. Okay, a lot of breakout names. But overall, you just need to know that breakout means that breakout, if it's going out, breakdown, breakout means that the price is consolidating. Okay, until they consolidate until a certain zone, then it chooses direction. When it chooses to go out, then this is the point that we should follow, no matter what is the name of the pattern. Okay, like this, you can see the chart. Okay, you can see the base is going out. You can see the support trend line is going out, meaning that the stock price is being consolidated. It's being consolidated. Okay, the range for it to move is lesser and lesser and lesser and lesser until certain point. This how we share to other people also. We say until certain point, it must choose direction. It must choose direction. Either choose to go up or choose to go down. If choose to go down, is a breakdown. If choose to go up, it's a breakout. Okay. When it successfully break out, this is the point that we join. This is the point that we join. Before it make the breakout or breakdown, we no need to much have any guessing first. Okay, we just need to focus whether it form the breakout, then we just follow. Okay. So for others also, like this one is another name. I just put a few inside. Actually, got a lot other like time and handle, boss breakout, a lot of breakouts. But in fact, the overall logic behind it is that it consolidate until certain point. Okay, it consolidate until certain point, then it break out of the resistance, break out the supply zone, meaning the demand at this moment is more than the supply, so that the price will move. So as basically everything that we share today from the starting until now is all linked. It's all linked. Like when we started, we share about supply and resistance. We share about the possibility. Okay. Then after that, we share about support and resistance, then breakout, increasing volume, this and that. It's all linked. So it has to be step by step. Okay. We share about the trend as well. So for those uptrend counter, basically it form based on the breakout. Okay. Based on the breakout. Okay. So like in this case, you can see from this chart, it gives 2 directions. Okay. The stop loss or like uptrend breakout. So basically it will have 2 directions. Either we can expect what's the direction that it will go, but when the breakout really comes, only we join in safer. Okay, so this one is another we call it the pattern. So like I just said, you see, basically it's all the same. If you have learned today, basically in future when you see the chart movement, you will feel everything is the same one. You don't need to care about the name one, because For us, maybe we learn those like China style, China price volume analysis style. Because some of the people, they learn the Western style one, Western style, okay? Like for example, the cup and handle, actually the China style one. Then for the Western style, they call it VCP. So a lot of different names, but in fact, the logic at the back is the same one. So when I discuss with other traders, like my trader friends, they learn different strategy, but everything is the same one basically. Okay, so this one is the same triangle breakout. When it consolidates until certain zone, then it chooses a direction. It chooses to go up, then we just follow. Okay, so that's all of my slide. Then I will go to the case study, the trading view case study. So if you are ready, you comment a 3 for me. Okay. If you all are ready, you comment a 3 for me. So I will go to the case study part. Okay. Let me share my chart now. Okay, all good now. Can see. Okay. Okay. So basically today we will be covering a few index. So later if we still got time, then we will cover some of those like stocks, like Hong Kong stocks. Okay. So let's see for the Dow Jones first. Okay. So we apply what we learn. The breakout, let's say the breakout, right? Okay. So it's already obvious. This point is one of the breakout point. Okay. Breakout means that the so-called the supply. Okay. The so-called the supply is not that we mentioned. Okay. So you see this point. Okay. This point is the previous resistance. Okay. You see, earlier when the price hit this zone, okay, the price go down. So this time is the second time of challenging. Okay, total is 3 times. Okay, hit this zone 3 times. So this zone, when it's start to be broken out, means that the like what we just mentioned, the supply is lesser already. Okay, the demand is much higher. The demand absorb the supply. So this one will be the new support. This zone will be the new support, like what we mentioned just now. Okay, basically when the resistance is broken, it will be the new support. So everything is linked. Okay, so for this one, it's very obviously can see that this one is the uptrend. So like we just mentioned, you buy the uptrend stock. You buy even for those like investors, you focus on those uptrend one. But if you want to trade, for the downtrend one, you focus on those like structural warrant also got. Okay, just that trend will follow the trend. Okay, like this point, for example, this point. This one is a downtrend point. Okay, let's say if you are buying at here. Okay, you want to catch the dip. Okay, but you didn't do your risk management well. Okay, when it break down, you never sell. Okay, then you will make losses. This is what I said. If you want to focus on those bottom catching, you have to make your those risk management well. Okay, or else when it start breaking your stop loss, you still want to hold. Okay, so let's say if you continue to hold, you see, you have to hold quite a long time, only it will go back to the price. Okay, so this is what we said. We have to follow the trend first. Okay, so for this one is the trend support, and the other part is here. Okay, the other part is here. This one is a previous peak. Okay, previous peak. So this point, it breaks out already. So if you are a short-term one, or you just make an entry, okay, so you focus on those nearer one. We call it immediate support. Basically, it's the nearer support. It wouldn't be as firm as those support or those prices which has been challenged for previous time, like this one. This one challenged for a few times already, so more firm. For this one only, like just one time. But this one is more near, it's much nearer. So this one you can add as a reference. Okay. So this one is the for the Dow Jones. So let's see for the Nasdaq. Basically, it's the same. You see. Okay. For this one, like we mentioned, if you see this chart, you have to connect the most touch point. High to high, low to low. Okay. You see, it's very simple. Okay. You see, What is this? This one is very obvious. This one is a resistance. Okay, it's a resistance. Okay, it's a resistance, right? It's a resistance. Okay, very obvious because the price touches there, then it start going down. So this one is a resistance. Okay, so like what we said just now, breakout is when stop price breaks above resistance. This is the point. This is the point. When it breaks above the resistance, when it breaks above the resistance, meaning this point, based on the previous few time testing, it cannot break out until certain day, certain zone. Based on some reason, we don't need to care what is the reason because a lot of news out there. We cannot follow all the news. So based on some reason, the price starts to break out of the resistance zone. This is where the trend starts. This is where the trend starts. Okay, so this is the trend. Okay, so basically it's all linked. Like just now, all the techniques that we share is all linked. Just that whether we're able to spot from the chart the resistance point, the support point of it. Okay, so in this case, you want to find the support. If let's say you want to find the trend support, okay, you see this one is a trend support. Okay, why? Because it touches 1 point, 2 point, 3 point, okay, almost 4 point already. So the most touch point is the support or the resistance. As simple as that. Okay, this one is the next step. So this one is the SP 500. This one you can see basically these three they link one because all this is the major indices. Okay, so as usual, you find the resistance first. You find the resistance, you find the support first. Okay, so it's obviously can see that just break the new high. Okay, just break the new high. So it's same as just what we shared in the Dow Jones. This one, this zone will be the short-term support zone at this zone. Okay, because this one previously is a resistance. Okay, so it just broke out. So this zone will be the new support zone. Okay, overall this trend has been going up for quite long already. If you want to join, let's say if this is a single stock, if you want to join, you have to make your risk management well because from the day that it breaks out until now, quite long already. You see the same thing. You see, you have to find the resistance and support first. Okay, so this zone is the breakout zone. Okay, because 1 time, 2 times, 3 times, the 4th time after it challenged, then it breaks out. So this point, resistance becomes support. Okay, resistance becomes support. Okay, so let's see the Hang Seng. Okay, this one. Okay, first of all, very obviously, if you compare this and the US one, you can see this one is a very obvious downtrend, right? So we have to see the trend first, the overall trend. Then you dig into the support and resistance. Okay. So for this one, okay, this part is the support part because this one is a previous low point. Okay. So when the price reaches the zone, so might have the demand coming in, like just now what we shared. Okay. When the price until certain zone, people think that this point is a safe point. Okay, it cannot drop any lower. So this is why the demand will start coming in at this zone. Okay. So after this, you can see in short-term wise, the stock price has already moved a short-term uptrend. Short-term only. Why short-term? Because the majority term is a downtrend. Okay, so this one is a short-term uptrend. You can call it as a short-term rebound trend. Any name you call it, no worries. As long as you're able to identify it. Then how would you want to know whether this one will sustain? We wouldn't know. You just based on the chart. You just based on the chart like this one. Okay. You mark the most touch point first. You mark the most touch point first. Okay, like this. What is this? This one is the support trend line. Support trend line. You just draw. It's very simple one. You spot. If you have an experience enough, you see the chart, you will know where to draw. You will know where is the support, where is the trend, where is the line, everything you can plot inside. Okay. So this one is a short-term one. Okay. Short-term uptrend. You see, like I just mentioned, short-term trend. Overall, it's a downtrend, but this one is a short-term trend. So you can also mark the resistance. Actually, you can mark the parallel line one. Let me see. Parallel channel. Because all these are, you can see, you can mark a parallel channel. Parallel channel means that this stock or this counter, okay, it should move within the zone. Actually, this one is one of the chart that we show inside the slide just now. If you all remember, this is the zone where the stock move within the zone. So let's say if we continue to move out, move down, okay, it will be good. It will be good, okay? up, down, up, down, up, down, up, down. It will be good until one day when it breaks out, okay, momentum getting higher. Or one day it breaks down of the support zone. Okay, breaks down of the support zone. Means that, okay, the short-term trend gone already. That's all, finish. As simple as that. So all these things link to the slide that we just shared. Just that this one is the actual case study. Okay, for this one is the okay Hansen technology. Okay, the same. Okay, you see the stop price rebounded after the trend going down. So at this zone, if you want to only identify for the short-term one, you can mark the short-term support and resistance. Okay, let's say for now. Okay, I just mark this one is a short-term support. Okay, because it's tested 2 times. It tested 2 times. Okay, very short-term one, very short-term. Okay, if you want to focus on the trend one, you can mark this zone. Okay, you can mark this zone. Why? Because okay, it touches a few times. It touches a few times, and if you all really look into it, you can understand that it's basically resistance becomes support. It's basically resistance becomes support. At this point, okay, the previous resistance, okay, cannot break out one. All these previously cannot break out one until someday it broke out. Okay, it broke out. Okay, it broke out. Okay, so this one is the support. You see, it tested again, then it cannot go down because like we just checked, resistance when it breaks out, it becomes support. So this one supported. Okay, when it's supported, it go up again. So what is the next support? It will be here. It can be here. It can be here. This zone, we call it the zone. Okay, this is the zone. Okay, then probably the second time it will test back again, like here, test back again before it's again out. Okay, it's all linked. It's all linked. Resistance becomes support, support becomes resistance. Okay, so okay, one more is the Nikkei, the Japanese one. Okay, the Japanese one. Okay, basically this one also very obvious is the uptrend. But I redraw for you all. You see, this one also very simple. You see, this one is very, very obvious resistance. Very obvious resistance, right? This point, this point, this point. Very obvious resistance. Until one day, it breaks out. It breaks out. Very obvious, right? The candlestick already stand out. Okay? You don't need to, it's not to say no need, but we say we can less focus on those news because too many news already. And some of this one is the index. If index, it will link to the country's economy. A lot of things you have to study. But if you focus on the chart, you manage your risk well, then it's okay already. For example, this one, maybe that time, a lot of good news come out. So this index break out. Okay, so I don't need to care what is the good news coming out that time. Okay, I just need to focus on my risk. Let's say this one is a stop. Okay, if I buy here, I buy at the breakout point. Where is my stop loss? I stop loss when the candle breaks below the support, because the support, where the support is the previous resistance, the blue color boxes that I just drew. Okay, previous resistance now has become support. So if I buy in based on the breakout, I buy in, where will be my stop loss? I will stop loss when it breaks down. The support is broken, then I will jump. I will just exit. Okay. So I don't need to care whether, like any bad news release that time, if even though the bad news or the good news release, but the index continue to drop, I will still exit one. No need to care about the news. You focus on your risk. When you enter the time, you should have already calculated your risk one. Okay. So this one, Nikkei is very simple, very obvious. This zone is a resistance zone. Okay. If you drawing other formation, okay, you can know that this one also another CNH cut and handle. Okay, cut and handle breakout. Okay, this one is the bottom is being lifted. Okay, we call it the bottom. This one is the bottom zone. Okay, after that, when it hit one time resistance, it go down. But you see, when it goes down, it never touch this zone. Okay, it never touch this zone. Okay, it never touches the previous support zone. Okay, the support has been lifted. Okay, the support is now higher. What does it mean? It means that more people is buying. People think that, okay, at this point, the price is cheap enough. The price is acceptable. They don't want to wait until the previous low point. Until this zone, they have already start buying. Means that the buying power has been increasing compared to earlier. That's why the support is lifted. The support is getting higher. Okay. So when more people is buying, you can see, okay, the price going up, 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 up until one day it chooses a direction. Like I said, it chooses a direction. It not necessarily it has to be go up one, but just that when the consolidation comes, we have to monitor whether it chooses the uptrend or chooses the downtrend, breakdown or breakout. Okay, this all linked to the slide that we just shared. Okay, it's like until certain point the price consolidate. Okay, the room of it for it to move is getting lesser. It consolidate until one point it break out, or it chooses a direction. Okay, so this one is very simple. Then for this type of breakout new high stop, how do you identify the support and resistance after that? Sorry, the resistance after that. You can use the what is called the Fibonacci. Okay, it's really simple. Everything is linked. You just draw you connect the high and low. Then you will able to calculate for you the expected resistance. Like you see, I just drew. Okay, then this is one of the resistance, and this one is one of the resistance. Okay, this is all auto one. All auto draw one. Okay, you can see. Okay, after okay, I deleted this one. I did this one first. Okay, you can see, when it touches this area, okay, it really consolidate again. It consolidate again. Means that at this point, it's one of the resistance. So they have to digest. They go up, okay, some people sell. So it has to wait for more buyer to come in for the second uptrend. Okay, so you can see that the other line that I just draw, the one based on Fibonacci. Okay, also after it hit, then it come down already. So if you want to identify those resistance for those break new high stock or index, you can use the Fibonacci. Okay, I got now it's a Q&A session supposedly, but I want to share one more thing. Okay, the Fibonacci is the Western style of indicator, Western style of technical analysis. Actually, technical analysis it has two types, the China type and the Western type. Because some of you might not know about this. Okay, so if I want to use the Western style, I use the Fibonacci. If I want to use the China style, I use the fulfillment strategy. This one could be a little bit complicated, but I just want to share. Okay, this one is from the low. Okay, from the low point to the okay, the peak to low, the peak to low. Okay, this one is another peak to low here. Okay, another peak to low. Sorry, this part. Okay, another peak to low. Okay, so if you want to calculate the fulfillment, okay, you can see exactly the same as Fibonacci one. Second time. Basically it's the same. So if you able to know, if you're able to study enough of the technical analysis, basically you can realize Western style, China style, all the same one, just that people don't know. You can see the calculation basically almost the same one, because this is the logic behind. Just that how you want to present it, how you want to draw it. This part a little bit complicated already. It's more advanced TA, more advanced technical analysis, but I just want to bring in the idea that all this is linked. You can see China people using China style, Western people using Western style, but based on the same index, they might be able to calculate the same zone of resistance. Okay, so okay, so there's where I want to share to you all. I got 10 more minutes for Q&A, because in fact I prepared some of the Hong Kong stock just in case the time still got, I can just go through. But my major cover is the index. So I think this is all my point. I hope you all learned something today. Some of the TA today. If you learn something today, you can comment a 5 for me. Comment a 5 for me. It might be a little bit complicated, but I wish you all know that all TA is linked. All technical analysis is linked. No matter Western or China, as long as you're able to equip with the technical analysis strategy, find the support and resistance, spot the trend, then it will be all good for you. Okay, thank you.
All right, thank you so much, YC. I don't even know there's a China version of the technical analysis. I only know there's a Western and also a Japanese version.
Yes.
All right. Thank you so much, YC, for sharing with us technical analysis, what is your strategy, and also the outlook by analyzing the 6 indices that you have just covered, from the 3 indices in US, 2 indices in Hong Kong, and one more from the Japanese market. So if any question for YC, please write them at the Q&A box here, not the chat box. Write them at the Q&A box. Okay, we'll do a quick Q&A with YC. YC, the first question from Maslan is that, can you share more about cup and handle?
Okay, cup and handle. Let's say, I think just now for the Japanese one, okay, for this one, Japanese one, is one of the very one of the, not to say very good case of cup and handle, because by right the cup and handle, right, if the candlestick, if let's say it hits this zone, sorry, use the other one. If let's say it hit this zone, okay, when the curve come to this zone, okay, like you see the blue and the yellow zone, this is the first movement and the second movement. The second movement is good, just that the first movement is not as per those classic cup. Okay, the handle is good, the cup is not as per the classic cup, but this one could be one of the good example lah. So this one, you trade the cup and handle breakout. Okay, so this is the breakout point, then you buy in the breakout. For just like I mentioned, cup and handle is usually it's a China one, you call it Japanese or the China style, those like we call it Eastern people one. Okay, then the Western style they call it VCP. Okay, VCP is like cup and handle is cup and handle So VCP is like probably they will have another one, probably another two. Meaning actually all the techniques is all in one. What is this? It means that the price is consolidating, right? It's consolidating, like I just shared in the slide. Basically, when the stock price consolidate until someday it has no room to go, so it has to choose a direction. Actually, it's the same. Just that cup and handle for Eastern people, they two circle. Okay, one is the cup, one is the handle. For the VCP, they can have many handle until one point it breaks out. So if all of us understand the logic behind it, actually is the same one. Okay, so I hope I answer your question. Okay, okay. So basically, what's the next question?
So what would be the trading strategy if we see a cup and handle? Like, what would be the target price we set, and what would be the stop loss price we set if this happened?
Okay, so for the cup and handle, our trading strategy will be buy on breakout. Our strategy definitely will be buy on breakout. When it breaks out, if not breaking out, then you can stop for a while first. But like me, like let's say if I know that the price is coming to the resistance already, like I said, we can buy in batches. Because let's say for example only, let's say if until this zone, I can still buy. It's a fresh, this one we call it fresh breakout. Fresh breakout. It's a fresh one. Just breakout. Okay. So if I want to buy all my position at this zone, I wouldn't feel comfortable. So probably earlier, for example, this price, like I said, I focus on the closing. I focus on the closing. Okay, it might not break the peak yet, but I focus on the closing. The closing, if the closing already start to come out of the resistance zone, then I will take a position already. Okay, so if you want to be play safe, you can take some of the position here. Okay, then when the fresh breakout really appear, you can add your balance position. Okay, this one is we call it the strategy. The strategy of it is the buy on breakout. So for the resistance and support, the resistance, the target price, so-called target price, like I just mentioned, you can use the Fibonacci. Very simple one, you use the Fibonacci. Fibonacci, it will calculate for you what is the resistance. In this case, okay, maybe my first TP is this zone. So it might definitely not every time we will sell at peak one. We just sell based on the comfortable range. Like at this point, maybe I sell a bit. Okay, I sell a bit. Okay, until this point, okay, I satisfied already. I don't want to hold anymore. I sell another. Okay, so this is we call it how you set the TP. This one is, we call it, you take the profit yourself. Okay, if the other type of strategy is that, okay, you wait for the trend to change. Okay, for example here, okay, you will sell here one because it's no longer above the moving average. So one is the passive one. You just wait for the trend to change, only you start selling. The other type is that you active one. you're actively taking profit. When it hit the zone that you're satisfied, you take the profit. It has two types of taking profit strategy. Okay, I hope I answer the question.
Yeah. So looking at the Nikkei charts right now, the next question by Connie is that what would be the potential entry that we can watch out for?
Mm, based on the trend wise, like I just mentioned, it has already broken the support already. This one is the trend support because this one is the moving average. Moving average is like a trend indicator. It used to identify the trend. So for now, I will feel like if I don't have position, I wouldn't much join at this point unless you are not seeing the overall trend. Unless you just want to play the very short term one. For example, you can see at this zone, one of the support zone. Okay, because earlier it touches here. Okay, touches here. Okay, so this point you can give some rooms for your entry until this point. Okay, the small box zone here could be your short-term immediate support if you really want to trade. If you really want to trade, but for the trend wise, like I just mentioned, you based on Fibonacci, everything it has already fulfilled the target price already. Even though for the just now that we calculated the one, okay, this one we call it 2 times fulfillment. Basically, 2 times fulfillment are already a lot already. Basically, for those like normal stock, just 1 time fulfillment. Like the breakout zone until the target price, just 1 time fulfillment. But this one, if you based on my calculation, already fulfilled for 2 times already. Max, I think 3 times. So that's the thing that I want to share lah, huh?
Okay, so you mean that it could be overextended lah, correct?
Yep.
At most 3 times lah, that's what you feel.
Usually it's 3 times. Usually it's 3 times. Like at most, at the very most already. Unless like certain very momentum driven stock, then different. But usually we say usual case, like if you play a single stock, 1 time fulfillment already a lot. Then you sell half, at least half. I would say at least half. Then the second time fulfillment, people will sell another half already. The one is actively taking profit style. If you are those holder, you focus on those moving average. Moving average broke down, then break down already.
Okay.
But for this one, I think the warrant, it got 2 direction also got.
Okay. Now, YC, you talk about breakout a couple of times. So, when a breakout happened, do we enter at the second candle for confirmation, or we enter at the first candle? So this is a question by Lily.
I'll focus on the first candle. I'll buy a bit at the first candle. Then when usually if the breakout is like too much during the first day, you don't want to chase at the peak. Usually when the breakout really comes okay, for example, we use this one because we are watching this. For example, let's say you want to you see this one, okay? Let's say during the day it start to break out halfway, then you know this one is a breakout already because it has already broken the previous resistance. Okay, so you can join a bit that time. Okay, it's not like until the full day candle. For example, if all these 3 candle is a full day candle this long of candle appear then you join at the top, then you will feel more scared So usually when it start to break out, we will buy a bit already. Then closing, we use closing as confirmation. For me, I use closing as confirmation. I'm not like using second day as confirmation. As long as the closing above the previous resistance zone, I know this one is more valid breakout. Then the second day or the third day, it might retrace a bit. But it's okay one. As long as it retrace, it's still above the breakout zone. Then okay. Because in Malaysia, we call it Malaysian market, you got a T2, T3 thing. So the first day it breaks out, T2, T1, T2, T3, it will start retracing. The volume has to be small. Okay, cannot be huge volume retracing. If you all notice, every time the breakout, like we mentioned in the slide, the breakout must come with increased volume. You identify this one is a real breakout. Then when the retracement is healthy one, then the volume will be a bit only, wouldn't be much higher than the previous breakout volume. So this one is a healthy strategy. So you wait for 3 days, then it will pump another candle again. Usually it's like this T2, T3 playing style. Okay.
All right, thank you so much, YC. So this is the time we have for the Q&A for now. But don't worry, YC will stay on for after the second speaker finish for another round of Q&A. So joining us in this session would be let me take over my screen. Yeah, would be Liana from Macquarie.
Hello, hi.
All right. So good to see you here, Liana.
Thank you, Shane.
All right. So allow me to briefly introduce Liana. Now, Miss Liana Majid has been a part of the Macquarie Warrant Malaysia desk since 2014. So it's good 10 years. So aside from presenting at educational seminars and workshops on structured warrants, she's also involved in the issuance, sales, and marketing of structured warrants listed on Bursa Malaysia. So prior to Macquarie, she used to work with a local investment bank as a market maker for exchange traded funds listed on Bursa Malaysia and Singapore Exchange. So she graduated from Purdue University, USA, majoring in actuarial science and applied statistics. And today, she will talk about what are structured warrants and how do you gain exposure to the foreign markets with the structured warrants issued on Bursa Malaysia. So, Macquarie is probably the only issuer where you can gain exposure to the Japanese market, the Nikkei market on Bursa Malaysia, without having to move your positions to abroad, right? So, if you want to gain exposure on Bursa Malaysia, so gain exposure to the Japanese market while you are on Bursa Malaysia, you can go through a Macquarie structured warrants on Nikkei. Right. So without further ado, let me just hand over the session to Liana to share with us more about structured warrants and how do you use structured warrants to gain leverage when you do trading.
All right, thank you, Shane. And good morning, everyone. My name is Liana. Okay, I'm from Macquarie, and as Shane has already introduced me, I've been with Macquarie for about 10 years. It's quite a long time with Macquarie. Okay, so before we start, let me share my screen first. Okay, can everyone see my screen now?
Perfect.
All right, good. Okay, so first of all, I would like to say thank you so much for everyone for attending this session. Thank you, Shane, for inviting me as one of the guest speakers for today. And thank you, I see your explanation is very good. I learned something from you as well regarding the Western and China chart pattern. So this is also my first time knowing about it. I also learned something. So for today, my topic will be more focused on the structured warrants and what is the connection between what YC has just presented earlier and between what I will be presenting is there's a connection because structured warrants are a product, a derivative, a product that's listed on Bursa Malaysia. So for investors who want to gain leverage exposures to the foreign markets, they can do that on Bursa Malaysia without opening any foreign account. They can just use their local trading account that they already have. For example, for traders who have already traded your stocks, now maybe it's your time to trade such warrants to gain access to the foreign markets via such warrants listed by Macquarie. So my presentation today, my session, so I will be covering something about the structured warrants. So this is just purely on the educational purpose. So there is no my presentation, there will be no recommendation or any buy and sell call lah. Okay, so let's move on to the next slide. All right, so maybe some of our audience today have already understand about structured warrants, but maybe some of you guys also still not aware what structured warrants are. So the basic is that the structured warrants is a derivative product which tracks performance of its underlying. So you can by the word of by the word of derivative product. Derivative means that a product that derive the price from the mother share. Mother share or its underlying index. Like for example, structured warrants can be listed over any single stocks or foreign stocks. So structured warrants can be listed over their underlying index, like Hang Seng Index, for example, is a popular index. Or S&P 500 index. Structured warrants can also be listed over Nikkei index, like what YC has already presented just now. It can also be listed over any other uh, financial product like ETF as well. Okay, so now, okay, just use the highlighter first. Okay, so where is structured warrants are listed? Structured warrants are listed on Bursa Malaysia. So structured warrants is actually an option. Okay, so it's similar like option, but it's just that in Asia is more is commonly used as structured warrants. So these structured warrants are listed on a primary market. Primary market meaning that when an issuer like Macquarie, for example, when we issue such warrants, we list that on the primary market on the secondary market where investors can actually trade it, just buy and sell the such warrants like a normal stocks. Okay, and they are also listed and traded in any other recognized exchanges. It's not only in Malaysia as well. All right, so what is the objective of the structured warrants? So the objective of the structured warrants is to provide exposure to investors, okay, provide exposure to the underlying or the mother share with only for a fraction of its underlying price, okay, meaning that if investors who want to trade single stocks, for example, if you think that um, US indices are good to trade now because YC checked the charts just now. It looks very bullish. So you want to gain exposure to the US markets, okay? It's because you think that you can make profit in a certain period of time, okay? So by having structured warrants listed on Bursa Malaysia allows you to gain the similar exposure to the US market with a fraction of the share price, meaning that structured warrants price is cheap. So usually the price of structured warrants are below 1 ringgit, or it's like a penny stocks. You can just consider it as like penny stock. You can see on the search on the market, like the price is around 10 cent, 20 cent, 30 cent. So it's cheap enough for investors to trade with only using low capital. Okay, and then you can get the similar exposure to mother share or underlying index. And who are the issuers of structured warrants? Who actually issue structured warrants? So structured warrants are issued by the third party or eligible broker or financial institution. Like for example, Macquarie lah. Macquarie is one of the issuers of structured warrants in Malaysia among five other structured warrants issuer that currently have in Malaysia. Like for example, RHB, CIMB, Kenanga, Afin. Okay. All right. Because YC explained charts about the index. So today our focus are mainly on the index warrants. Okay, so what are the reasons of investors can consider why you should consider trading index warrants, for example? Okay, one of the reason is that because of the volatility. Okay, volatility. So you can see this volatility chart, for example, for Hang Seng, the 5-year chart they have just taken from Bloomberg. You can see that it's very, very volatile. Like it can touch above 31,000 level 3 years ago back in 2021, and then it can just like go go down and to the lowest level in 2022, okay, from 31,000 level to 15,000 level. So it's about 7,000 points different. It's just move within 2 years or 3 years. So it's very volatile. And then once it's go down, it can go up very, very fast. So this indicates the high volatility, and that's one of the reasons why investors prefer to trade index warrants because it's volatile. Okay, so meaning that it moves very fast. Okay, another chart that I want to share on the Hang Seng, for example, okay, the year-to-date chart, now we are into the third month of 2024. You can see within 1 year, okay, Hang Seng can move very crazy. Like for example, it can start trading around the 16,000 level, and just within 2 weeks, it can drop from 17,000 to the lowest level for the year to 15,000. So it's about 2,000 points movement just within about 2 weeks. Okay. And then once it's go down, it can go up, go back up again and to trade around the 17,000 level recently, and then go back down to 16,000. So this is something very interesting, where one of the main reasons why investors like to trade index warrants. Okay. And I want to compare the graph between warrants and also the underlying chart. Okay. And because just now I mentioned about warrants is a derivative product. So the price of structured warrants derive from the price of the underlying futures. Okay. So this chart shows you the movement of the warrant. You can see the brown chart here is the structured warrants, and the blue chart behind this is the Hang Seng futures lah. Okay, so you can see that for the call warrant, for example, okay, I will explain more in detail lah how to recognize call warrant and put warrant. Okay, so this is the best chart to show you. For call warrant, for example, you can see the movement is similar to the mother. Okay, when the mother is when the mother goes down, so it also goes down as well. So when the mother goes up, so the such a warrant's price also goes up as well. So this really indicates is a warrant. Is a characteristic, a good characteristic of a call warrant, whereby it tracks the movement so closely of the mother. Okay. Now, for the second chart is a put warrant. So put warrant is the movement is the opposite. Okay, the movement is opposite. So the underlying index goes up, so put warrant will go down. So if the underlying futures go down, so the put warrant will go up. So what does it mean by having call and put warrant? Actually, I just want to show you that it means that regardless of the movement of the underlying features or index of in Hang Seng, for example, like for example, uh, warrants offer you two type of warrants to gain exposure in both market directions, meaning that if the index is not doing well, investors can still have the potential of profiting from buying the put warrant, from trading the put warrant, because uh, it will it will gain in value when the mother goes down. But for the call warrant, also you can trade it when the market is bullish. So for put warrant, the put warrant is more suitable for during the market downturn. Okay. All right. Another thing about why people trade index warrants is because of the diversification. I'm pretty sure everyone knows already lah. Index consists of a list of stocks from various sectors, which offers diversification. So this diversification is more attractive to traders due to the leverage exposure to broader market movement. Okay, and some traders also prefer to trade index warrants, especially those who seek hedge against specific company risk, for example. And some people trade index warrants because market sentiment, okay, like index movements reflect broader market sentiment, making index warrants more responsive to overall market trends. So currently, Macquarie have warrants over various foreign indices. Like for example, we have index warrants over the US index warrants, S&P 500, Dow Jones, and Nasdaq. For warrants over the Hong Kong, we have warrants that track the movement of Hang Seng and Hang Seng Tech. While Japan, we have Nikkei stock average lah, Nikkei 225. All right, I already explained just now about why people trade index warrants, because it gives you the leverage exposure in both directions via call and put warrants that such warrants offer. All right, because structured warrants follow the movement of the underlying futures. Okay, so the futures have their respective trading hour. Okay, so when the mother is moving, then the statutory warrants will also start moving based on their respective unlinked futures trading hour lah. The good thing about the US indices, because our statutory warrants track the futures, okay, not the cash index. So the futures for the US index, for example, S&P 500 and Dow Jones, Nasdaq, so they are traded about 23 hours a day, which also cover the Malaysia trading hour. Meaning that, okay, even though US is at night, okay, but because the futures are trading 23 hours, which cover Malaysia market, okay, so you all can trade warrants over the US index during Malaysia market hour. It's still moving during the Malaysia market hour. So like for example, here trading hours for US index, the morning session is from 9 a.m. to 12:29 p.m. Afternoon session from 2:30 to 4:43 p.m. So basically it covers the entire Malaysia trading hour. Whereas for Nikkei, okay, the futures that we use tracks is traded on the Singapore exchange. Okay, so the trading hour also slightly similar, which covers from the 9 a.m. to 12:29 p.m. But it starts slightly later when the afternoon session starts lah. Okay, it starts slightly later, which is at 2:55 p.m. to 4:43 p.m. While the Hong Kong indices starts from 9:15 a.m. to 11:58 and 2:30 to 4:28 p.m. So basically it's almost like the entire trading hour of the Malaysia market. So there's no problem for investors to trade these warrants. All right. Another reasons why investors like to trade the index warrants is because the liquidity. Okay. Indices typically have higher trading volumes and liquidity as compared to single stocks. Okay, so this also directly increase liquidity index warrants as well, because warrants we do hedging. Okay, so it also provide the same liquidity as their respective futures as well. So that translates to higher volume on both bid and ask prices of the stretch warrants. Okay, like for example, Macquarie among our warrants that have the highest liquidity, we can provide from 2 million, from 4 million units on both bid offer 4 million, 6 million. Okay, like for example here, 6 million lah on both bid and offer side. So what does it mean? So it means that you can uh, enter the trade very easily. Like for example, if you plan to buy a huge amount of trusted warrants at one instant, for example, then you can just like key in about 1 million, for example, 2 million, and then it can directly transact it. And let's say if you want to cut loss, for example, you want to cut loss all your trades, for example, then you can do so with ease because of the high liquidity. Okay, like for example, our warrants that have low liquidity, like for example, is still good actually, okay, because the big volume about 500K on both sides, for example, is still relatively good. All right. So question I have to our audience, which one has the highest liquidity? um I think it's very straightforward lah. Okay, like between these two tables, the warrant that offers you the highest liquidity, as I mentioned, the liquidity means that the quantity on both bid and offer, which has the highest volume. So you can see this table, this warrant provides you the highest liquidity lah. Okay, and but I just want to highlight about a common misconception regarding liquidity, because some people thinks that warrants that have the highest volume traded, okay, like for example, you see on the market, volume traded is about 21 million, okay, but sometimes you just see the big volume is just like 500K, for example, or less than 500K. So you don't want to get confused between the volume traded and the bid and offer volume. How you want to see warrant is liquid. Okay, don't be scared if you see that warrants doesn't have a good trading volume, some because there are so many structured warrants on the market, because not everyone trade all structured warrants on the market. They only pick the best which is more suitable for them. So you just need to see the bid and offer volume to consider whether that warrant provides you good liquidity. So that's the misconception that I want to clarify to everyone. Okay. All right. Now, Moving on to the next slide. So I'm just gonna go over some warrants basic. Uh, I'm pretty sure some of you knows, but maybe some of you guys are still want some refresher. Okay, some people still do not know about it. Okay, so the objective for structured warrants are purely because of the investment tool purpose. Like structured warrants, as compared to company warrant, do not want to be confused between such warrant and company warrant, okay? Because we usually just call it as warrant, okay? But you just need to know whether it's structured warrant or it's a company warrant. The company warrant is usually it is issued by company itself, okay? And part of the reason why company issue their own warrants because as the raising tool, as a capital raising tool. Like for example, instead of like getting some capital from the bank, so they can just issue such a warrant, their own warrant as a capital raising. But for structured warrants that issued by third party like us is purely for investment tool for people who just want to gain leverage exposure in the market and gain profit within a short period of time. Okay. And because warrants are issued by the financial entity, so we have our own market maker. Macquarie is also a market maker apart from being the issuer. Okay, so the function of the market maker is to provide the liquidity. Okay, meaning that for investors who want to buy and wants to sell, we always have our designated market maker who always be there throughout the entire Bursa Malaysia's trading hour to facilitate buy and sell for the investors, for the traders. Okay. All right. I'm pretty sure everyone knows about warrants having expiry date. For structured warrants, the expiry date is slightly shorter. It can go as short as 3 months, okay, and it can go up to 12 months. But for company warrant, it can the expiry date is usually from 2 to 5 years lah, okay. So what does it mean about the expiry? So when they have expiry date, meaning that the structured warrants are meant for shorter trading purpose, short-term trading purpose. Okay, it has the expiry settlement cash. But for such warrants in Malaysia currently are cash settle. Okay, and in terms of the stock name, okay, for the such warrants, for the call warrant, it's just very easy. So first of all, you will be able to see, okay, the name of the mother. Like for example, this warrant it tracks the S&P 500 index features. So it will start with S&P 500 first, okay, the name. And then after that, there's a hyphen. And if that is a call warrant, you will be able to see C. And after C, there's some serial lah. It can start with alphabet, it can start with numbers. So call warrant move similar to the underlying. Okay, I've already explained in the earlier slide. So when the mother go up, it will also go up. When the mother go down, call warrant will also go down. But the objective for call warrant is usually for people who have a bullish view lah. Okay, because you can buy low and sell high. So if you think that market can go uptrend, can be uptrend, then call warrant is suitable for you, of course, because you have a bullish view on the certain market. Whereas for put warrant, okay, same as call warrant, it will start with the mother's name first, and then after that, it will start with H. If you see H here on your trading account, okay, meaning that it's a put warrant, okay, and after that, this series it can go with the alphabet or numbers. So basically, the name of the structured warrants issued by all issuers are actually provided by Bursa. Bursa actually give the name of these structured warrants lah. Okay. Now, put warrant, the characteristic is opposite from the call warrant, meaning that it moves the opposite from the underlying as well. As I mentioned just now, so put warrant can is good for people who have a bearish view because of the nature where the movement of the warrant, put warrant will go up when the mother go down. Okay. Okay, another feature that I want to highlight to everyone, okay, for those who want to understand more about structured warrants. I know there are so many things to understand about structured warrants, but the key basic thing to know about structured warrants, okay, because it has a characteristic, because there are so many structured warrants on Bursa Malaysia, and how investors want to know which one is more suitable for you. Okay, so before you understand which one is more suitable for you, you need to understand what is the component in the structured warrants. What are the components that actually determines the characteristic of structured warrants, which is called as moneyness. Okay, so structured warrants has exercise price. So this is the basic thing, exercise price. Okay, so the exercise price actually determine whether the warrant will be in the money, at the money, or out of the money. And how do you want to know whether the warrant is in the money, at the money, of the money? So basically, you compare between the exercise price of the warrant and their respective underlying futures or underlying mother share. Okay. Um, so I don't want investors to confuse because there are so many things to understand. Okay, so I just want to show on the website. Can everyone see my screen, the website I'm showing? Okay, so basically, it has three types of moneyness, right? In the money, or the money. Okay, so underlying price. Okay, what does it mean? For example, don't be confused about this, okay, because we already have our dedicated website where we shows everything, okay, everything here. Okay, you can just Google Malaysia warrants. You can easily find on Google, okay, and click here. Okay, you click here and then you can go to warrant tools on the homepage, warrant search here, and then here this part, okay, this part, moneyness. Okay, in the money, then click submit. Like let's say lah, if you want to trade Hansing warrants, okay, you want to know which one is the in the money one. Okay, so paste, and then we just look at core warrant, for example. Let's say if you are bullish, then you can go with core warrant. Okay, you want to see which one is the in the money one. Okay, so it can just filter for you. Okay, so far, wow, we only have one in the money warrant so far. Okay, like for example, you want to know out the money warrant. Okay, we have so many out of the money warrant. Okay, so what does it mean? Okay, we only have one in the money warrant. We only have we have so many out of the money warrant. So what does it mean? Okay, so I just want to tell you that. Okay, so in the money warrant, um, okay, which one is good? Which one is some people maybe think that in the money warrant not good because we only have Macquarie only has one currently, but out of the money warrant maybe it's better because Macquarie has so many. Okay, but what was the purpose actually? But okay, let me show you. Okay, in the money warrant you can see the price. Okay, if you can see my screen now, the in the money warrant now the currently is trading 75 cent. Is relatively expensive lah, because I explained just now, it's like a penny stocks, right? So the purpose of it is for investors to be able to trade the warrant at a low at much cheaper price. Okay, for example, like this one. But is it good? Is it bad? Okay, I will explain to you later. But why this warrant, call warrant, is in the money is because you see the price is 16,000. This is exercise price of the warrant is 16,200. But the underlying price now, okay, the Hang Seng futures are currently trading at 16,700, meaning that market the futures are higher than the price, the exercise price. So when the underlying price is higher than exercise price for call warrant, it makes this warrant in the money. Okay. Why? Whereas for the out the money warrant, why we have so many? Because there are a lot of call warrants currently the exercise price is much higher than the underlying price lah. Okay, so okay, underlying the Hang Seng futures are lower than exercise price, and you can see the prices here. Okay, it's quite cheap. Okay, 40 cent, 20 cent, making it affordable for investors to buy Hang Seng futures if you want to gain leverage exposure to the Hang Seng futures. Okay, all right. So you can see here. Okay, in the money warrant has in terms of the price is high. Okay, in terms of the price compared to out of the money warrant, the price is highest. Okay, higher than the out of the money warrant. I show you just now. Okay, the price of the in the money warrant just now was trading around 70 cent, whereas the at money warrant of the money warrant, the price is just around like what below 50 cent. So that's the difference lah. Okay, both of them have time value. Time value is normal because these warrants have expiry date. as long as they are still traded on Bursa Malaysia, they still have the time value. Okay, so in the money warrant, only in the money warrant has intrinsic value. In terms of the gearing, okay, gearing, you can see in the money warrant, uh, okay, gearing in the money warrant, the gearing is about 7 less than 10, but the price is a bit at the high end, okay? So meaning that the gearing is lower than the warrants that is out the money warrant, okay? Okay, you can see here for out the money warrant, the gearing is at the high end lah, okay, a bit high. Okay, what does it mean, gearing? So gearing actually refers to the risk, okay. So basically the warrants will move based on the gearing. For every 1% movement in the futures or the mother share, okay, so the warrant will move by X amount of gearing that the warrants offer. So of course, gearing offers investors a higher profit potential, but at the same time also provides a higher potential of losses as well lah. So actually this I want just to show to everyone, uh gearing indicates that warrants that are more suitable for investors based on your trading profile. If you are okay to trade warrants with a higher gearing because you think that you are an aggressive trader, you want to gain profit in a short period of time, but at the same time you're okay to absorb the risk of losses, then you can go ahead to trade warrants that have the higher gearing lah, because also the price is also lowest, okay, cheap, below 50 cent. But for warrants that slightly above 50 cent or slightly higher than out the money warrant, so it offers you the gearing, slightly lower gearing lah, but of course it's more stable, because if you don't make a lot of profit, but at the same time when the when your views is wrong, then the losses is also slightly lesser than warrants that have a higher gearing, okay. All right. So which one is better, in the money warrant or out the money warrant? So the question is, you need to ask yourself, which warrant that is more suitable for you? Okay. All right. Another characteristic that determines the warrant is the expiry date. Okay. The warrants can be as short as 3 months for index warrants. Currently, index warrants listed on Bursa Malaysia can be as short as 3 months. What does it mean? So meaning that if this warrant is listed today, okay, if it says expiry date 3 months from now, meaning that the expiry it can only live for about 3 months. So meaning that the expiry date will be on the 16th June. Okay, so that's what it means lah. So important thing that I want to highlight, when the warrant has the expiry date, it has the last trading day, it has the suspension day. All such warrants listed on Bursa Malaysia, it will be suspended 1 day before the expiry date. Meaning that if you want to cut loss or whatever, so you only have, okay, you need to know when is the last trading date for the such warrants. Okay, so the last trading date is 2 days before the warrants expire. So like for example, if the warrant expire on the 30th of the month, so you need to be able to know that the such warrants last trading day is on the 28th of the month. Okay. So but let's say if such warrants expire on Friday 25th. Okay. So when is the last trading day? The last trading day is 23rd. Why is it important to understand to know the last trading day? Is because let's say if you wait until warrant expired, then only you want to cut loss, you want to sell back, you want to take profit, you are not able to do that anymore, because Bursa has already automatically suspend the warrant from invest for traders to be able to trade anything. Okay, so you have to know this. Okay, I have a question. So let's say I have this one warrant that tracks Dow Jones, for example. The expiry date is this Monday, 18 March. 18 March. Okay, today is 16 March. When is the last trading day and the suspension day? Okay. So the last trading day, as I mentioned, is 2 days before the expiry date. Okay, expiry date is tomorrow. On this coming Monday. Okay. So the calendar, so meaning that the last trading day is 2 market days. 2 market days. Okay, 2 market days, meaning that the last trading day is on uh the 14th, because it is already suspended. yesterday on Friday. Okay. All right. Wow. Okay. I only have about 10 minutes left. I think I don't have time to explain about this, but don't worry, okay, because we will be another series, more series with Welford. So I will take note that I will explain more about the call warrant structure. Okay. So let's just move on to another slide about what Macquarie's warrants have. Okay, so Macquarie currently have warrants in the foreign index. Okay, I've already explained. We have Hang Seng Index warrant, Hang Seng Tech, Dow Jones, S&P 500. We have Nasdaq, and also we have the Nikkei stock average Nikkei 225. Okay, I want to explain more about Nikkei because this is a relatively a new warrants for Macquarie lah. We have just listed that last year actually, sometimes in August. Okay, so a little bit of fun fact for those who still do not know what is the Nikkei 225. So Nikkei 225 is it listed way back in 1950. So for over 10 years, the Nikkei has already gained by more than double. And with the index is currently trading over the 38,000 level as of yesterday. Okay. Last week alone, it has reached to its all-time high to trade above the 40,000 level. YC also has just showed you the chart for the Nikkei. Okay, actually, for those who do not have trading views or whatever, you can just Google Nikkei and you can see. Okay, the chart for Nikkei. You can see it is volatile, as I mentioned to you, the volatility of index warrants. Okay, the volatility of index. Okay, so you can see lah, how Nikkei index has moved over a period of time. Okay, so, what is Nikkei actually? Why Macquarie issue warrants over Nikkei? Okay, so Nikkei is consists of 225 stocks selected from domestic common stocks in the prime market of the Tokyo Stock Exchange. So, what does it mean? It means that the index features industry giants consisting of prominent Japanese companies such as Toyota, Sony, Nintendo, and many others, providing indicator of the Japanese stock market. So this technically means that technically Nikkei 225 is like a scorecard lah for the Japanese stock market. So when the Nikkei 225 goes up, it means that most of the big companies in Japan are doing well in the stock market and vice versa. And also the fun fact about Nikkei 225 is that the Japanese yen and benchmark Nikkei, okay, 225 index are actually highly correlated, about 70%. So it consistently demonstrate a strong correlation until today. And it it is also a volatility watch for most traders, okay? Other than being highly liquid through actively traded futures, options, and ETF around the world, this index is also known for its sensitivity to global economic shift, okay? Resulting in the index to experience significant volatility. So these are the fun facts about Nikkei, okay? All right. And how do you want to know uh which Nikkei warrant listed on Bursa Malaysia? So the stock code for Nikkei 225 warrants is this 0654. So if you have your trading account, you can quickly check. Okay, stock code for Nikkei warrants is 0654, and the name of the Nikkei warrants will start with Nikkei. All right. So we currently have about 7 Nikkei warrants currently listed on Bursa Malaysia. Okay. You can also use our website to see. Okay, I like to use Warrant Search because Warrant Search is actually not only give you all the warrants listed by Macquarie, it also give you all warrants listed on Bursa Malaysia, meaning that other issuers such warrants also their details are also here lah. Okay, so you can see. But if you can just use all of these Warrant Search indicators and just filter based on any criteria that you want to see. Okay. All right. So useful tips I want to highlight to all of you, okay, about Nikkei 225 index, okay. So our Nikkei 225 warrants tracks Nikkei 225 index futures. listed on SGX. Okay, so actually, Nikkei 225 futures are primarily traded on the Osaka Exchange. Okay, which is one of the major financial exchanges in Japan. So other than OSE, Osaka Exchange, the Nikkei 225 futures are also traded on the Singapore Exchange. So the Singapore Exchange listed futures, okay, allow investors outside Japan to gain exposure to Japanese equity markets without having to directly access to the OSE lah. But the majority of trading volume for Nikkei futures typically occurs on these two exchanges. All right. And I explained just now about the expiry date. All such warrants have expiry date. For warrants, Macquarie warrants, Nikkei warrants, okay. So the expiry date is so the Nikkei 225 futures expires every second Friday every quarter for every quarter. Okay. And the interesting thing about Nikkei 225 futures that are listed on SGX is that they are open every day except for New Year, meaning that they are traded all year round except they're only closed for one day to celebrate New Year. That's it. Now, how to recognize Macquarie's other index warrants on your trading platform? Okay, so the stock code will start with 065, and then after that it will can be 061 for 0651 for Hang Seng, for 0657 for Hang Seng Tech. So you can see lah, okay, the stock code and the stock name will start with their respective underlying mother. Okay. And you can just use our warrant search I showed just now. Okay, you can just simply click on the underlying if you want to see indices, for example. And then if you want to know Macquarie warrants, you can just click submit here. Okay, and then this warrant search will show you. Internet's a little bit slow today. Okay, so it shows you lah. Okay, Dow Jones, KLCI. So, but if you want to be more specific, you can just go and type their specific index that you want to see. For example, let's say if you want to see Dow Jones warrants listed by Macquarie, then you can see lah. This is our the money warrant. Now you can see the price is trading 20 cents, 16 cents. Okay, so you can choose which warrant that are more suitable for you based on the price that you are affordable to buy and based on the gearing level that you can manage in terms of the risk management. Okay. All right, another thing that I want to explain about the index warrants, okay, because index warrants track their respective underlying futures. So, you know, futures have expiry date as well, okay, and their expiry date is different, okay, among each other. Some of the futures expired on a monthly basis, like for example, Hang Seng and Hang Seng Tech, they expire on monthly basis, and usually they will expire at month end, okay. For S&P 500, for US index warrants lah, okay, US index warrants, they expire on a quarterly basis. Similar to Nikkei, it also expire on quarterly basis, okay, and for US index futures, they expire every third Friday for every quarter. Like for example, now, today, right now is a good timing, okay? It's 16 March. So for the S&P 500 futures, Dow Jones futures, Nasdaq futures, okay, they expire, the expiry date for these futures on the third Friday of the March, okay, every quarter, which is on the 15th March, okay, on the 15th March. All right. For Nikkei, it expires on the second Friday. So it has already expired. Like for example, for the March contract, okay, the quarterly contract, the March contract has already expired on the 8th March, okay? And why they choose to expire on the third Friday or the second Friday, that one you don't ask me lah. Okay, this one is up to the respective exchanges to decide on their respective futures expiry date. Okay, so because such warrants follow the movement of their respective futures, so the expiry date also follow their respective futures. Okay, so how do you want to know? Okay, when is the expiry date for all of my warrants? Okay, so you can actually check on our website as well. Okay, and like for example, for Hang Seng futures, okay, because they track their respective Hang Seng futures, right? And so every month, okay, futures will change. from March to April. So our warrants that track, our Hang Seng warrants that track the Hang Seng futures also will change every month as well, okay, depending on their respective futures month contract. Like for example, now March, right? It's March. So which month contract that our Hang Seng warrants are tracking? So it's still following the Hang Seng futures March contract. But as we are going into April, okay, so Hang Seng warrants will start tracking the Hang Seng futures April as well. When is it? So it will be tracking starting at the end of the month. Okay. So how do you want to know? It's just easy, okay? Either you can check on our website or we also have a Telegram channel, okay? We have a Telegram channel and you can actually check on our Telegram channel because we will make announcement. Okay, before I end my slide, I just want to go quickly lah on the tools, the useful tool that investors can use to make any assessment on the warrants that you want to trade. So number one, we have warrant search. Okay, I've already explained to you warrant search, whereby you can see all the warrants listed on Bursa Malaysia. And number two, we have warrant terms, which shows warrant details and warrant strength details. Like here, you can see it shows you the price of the such warrants, how many of the volume that has already traded for the day. Okay, and also displays you intraday chart or 1 week chart and 1 month chart just to show you. So this chart, for example, okay, for this warrant specifically, when you want to trade, you have to see the chart first. Okay, if you see the chart is like this, like for example, this is the call warrant. When the call warrant follows exactly the movement of the underlying futures, it means that this is a good warrant to trade. Okay, so this is a good warrant to trade. So this is the tip lah that I can share with you. Another thing that we have as well on our website is a warrant calculator. Okay. Warrant calculator, this is can provide you an indicative simulated results. Like let's say if you want to buy a particular warrant for today, okay, if the warrant is 20 cent and you think that futures, Hang Seng futures, for example, will go up within to a certain level, and then you can just simply use our warrant calculator just to see the indicative price lah, okay, or the expected price for the respective warrant that you want to see. Okay, for example, here you can use our warrant calculator. Okay, for example, you want to see Hang Seng put warrant. This is put warrant, okay. So for example, the warrant price is 12 cent currently, and maybe you think that it will go down by 200 levels. So I change in the calculator the level, okay, and then I try to change the date lah, maybe in 2 days, 19 March, okay, in 19 March, Tuesday. If Hang Seng futures trade 16,500 on Tuesday, what would it be? See, just now the price was 11 cent, right? 11.5 cent. Now it has already moved to 12 cent. So this is a put warrant lah. So basically it can, give you some indicative price for you just to think, oh, if Hang Seng warrants drop by certain point, how my warrant price would be on a certain date. So this is a very useful tool lah, because you can actually use this warrant calculator just to see, for you to make your informed decision before you start purchasing warrant. Okay. All right. Another thing. Okay, live metrics. So, another features that we have, this is very useful. The live metrics is a proprietary tool which is directly linked to our trading system, offering several benefits, including you can view up to 9 warrants on the same page. Let's say if you trade more than one warrants, okay, at the same time, and you want to monitor the price of the such warrant, so live metric actually give you a table of price, okay, a table of price of a certain warrant of the particular warrant throughout the day, so that if for intraday trader, for example, let's say if you enter your position in the morning session and you want to close your position in the afternoon session, you can use the live metrics. Okay. You can also just use our live metrics just to see any other terms. Okay, like for example here on our website. Okay, I just go to live metrics. Like for example, if you have a lot such warrants that you trade, okay, you can just click lah up to 9. So you can see one warrant, more than one warrant at the same time. Okay, so it's currently available because it's already weekend lah, so we don't show it. All right, so it's basically like this lah. Okay, you can see the price. Okay, I will go over this how to read the live metrics, how to use it in our next session because we will have more sessions with with Welford. So today is just basic. This is the live metrics plus where to find the live metrics plus. You can just simply go to our website, okay, and just find our live metrics. And I want to show you that other than the live metrics, we have a lot of other things on the website as well. You can just if you want to learn more about structured warrants, we have Investor Academy under the Warrant Education tab. Okay, just simply click on that and you can read. Okay, you can read everything. Everything is on the website. So let's say if you want to get more clarification of what I have just explained to you today, you can just simply go to a website and read it. Okay, so I think that's it for me for now. Let's just open for a Q&A if we have any questions from everyone.
Thank you so much, Liana, for sharing with us what exactly are warrants and how do you use Macquarie's warrants tools to trade warrants. So if you have any questions in regards to warrants, you may type those questions in the Q&A box. We'll attempt to address all of them within the 10 minutes time that we have now. All right. So the first question I see on my screen is that are structured warrants similar to CFD, contract for difference?
Oh, okay. Contract for difference. So this is slightly different. Okay, so basically I'm not really like specialized in CFD. Okay, it's different from CFD, so I cannot tell more about CFD, but what I can say is that such warrants are more similar to options. Okay, so I mean it's like option lah, but it's commonly known as structured warrants in Asia. Okay, so basically it tracks the movement of the respective online futures and the single stock. So if you want to know more about CFD, I would say that maybe Shane can do a webinar on the CFD to explain more about it. Okay, because I'm not an expert in CFD, so I cannot explain more about CFD lah. But basically, what I can say is that structured warrants are similar to options because they follow the movement of their respective online futures with a fraction of the share price.
All right, maybe you can share with us what are the differences between structured warrants and options?
I see. Okay, so it's just the same. Okay, the characteristic is the same. Okay, how we derive the price for structured warrants are also the same, like how options price are derived. Okay, we use the same formula, which is the Black-Scholes formula. Okay, that's something more technical, but it's technically the same. Okay, it has the expiry date, it has the exercise price, it has the implied volatility, where all of these variables are put in place in one formula where that's how we come up with the price of the such warrants. And we use a similar formula for options as well. So that's why I say it's completely the same. It's just that the name we don't call options in Malaysia. Yeah.
Yeah. But I
Yeah.
understand that the options in America, they are American style, but structured warrants are
Mm.
European style kind of settlement.
Okay,
Yeah.
let me explain more about that. Okay, so it's the same. Okay, options have three types of settlement. Uh, American American style, European style, and also the exotic style lah. Okay, so American style is whereby when you buy the warrant, okay, when you buy warrant and option, okay, you can exercise it before the expiry date. Okay, for European option or European such warrants, okay, so investors, traders who buy the warrant with European style, you can only exercise it on the expiry date. Okay, but for the exotic, there is another option lah, which is the exotic. So it's completely the same. You see, completely the same. But what is the difference between such warrants and options? Such warrants are listed on Bursa Malaysia. It's completely the same. But such warrants listed on Bursa Malaysia now applies the European style, meaning that the warrants will be listed up to the expiry date. When the warrant expire on the expiry date, can only it will be exercised. Okay, but as I mentioned, such warrants has the expiry date. So the objective of such warrants are meant for the short trading term. Okay, so investors, traders can trade such warrants for the short trading, for short term trading, just to to gain the profit lah. You can buy and sell. You don't have to wait until expiry date, uh, to wait to exercise the warrant, because our such warrants listed on Bursa Malaysia are cash settle. Okay, you buy such warrants cash settle, meaning that you will only get the difference between the underlying and exercise price. So that's the cash settlement price, we call it. Okay, then we will pay back to the investors. And you do not want to confuse. The settlement difference is sometimes lower than the buying price that you buy. Like for example, if you buy your warrant about 20 cent, and you think that this warrant will expire in the money, okay, in the money, for example. And then when we wait until the expiry date, yes, the warrant expire in the money, okay, but based on the settlement difference, okay, based on the difference between the underlying price and also the exercise price, we calculate it, you only get 10 cent. So your buying price is 20 cent, but the cash settlement is 10 cent. Yes, you will get back the money 10 cent. Is it a profit or is it a loss? You're not making a profit, right? Because you bought at 20 cent, but you get back as a cash settlement for 10 cent. So it's still not a profit. So that's why you always say for investors, do not wait for, I mean, this is not something a recommendation lah, okay? I mean, something that for investors knowledge lah, okay? So usually people don't wait until the expiry date, because there will be a possibility that the warrant will not expire in the money, meaning that you will not get back any cash settlement, and there will be no cash settlement, meaning that you will experience 100% of losses. Okay, even though your warrants expire in the money, yes, you will get back some money. I explained just now, if you get back 10 cent, but you bought at 20 cent, so it's still considered a loss. So why don't you just, like, buy 20 cent, and when you see your warrant has already made some profit, okay, from 20 cent to 30 cent or 40 cent, so you can just easily sell it back to the market and gain the profit. So as what I can say is the same, such warrants and options with the same expiry settlement, European, American, exotic style, okay? But Malaysia, all such warrants listed on Malaysia are European style, meaning that we wait until the issuer wait until the expiry date to exercise the such warrants. Okay, so whether your warrant will expire in the money or the money or at the money, that will depend up to the expiry date, because we need to wait for the we need to wait until the expiry date to determine what is the closing price of the respective mother, okay, underlying index, or the closing price of the stock. So that's what I can explain. Hopefully this explained.
Thanks, Liana, for the clarification. The next question is by Chin. Are there any reasons why not all warrants are listed in the live matrix?
Okay. For Macquarie warrants, we have the live metrics. Okay, I'm not sure if you want to, if your question is more on the warrants issued by other issuer, that one I'm not sure. But uh, rest assured, I can assure you that all such warrants listed by Macquarie, we have the live metrics. But okay, for warrants that are not good to trade anymore, okay, so maybe your question is based on this, okay? We have warrants that are not good to trade anymore, which is what we call it as worthless. Um, Worthless warrant, meaning that the price is close to zero. Okay, so you can see sometimes 0.005 is like half a cent. Okay, half a cent. So it's actually the warrant is close to zero. Okay, let me show you out of the money warrant lah, because out of the money warrant is the warrant that is almost worthless, can be almost worthless. Okay, so Nikkei is good so far. Okay, let's just go to Hansing lah, Hansing, because a lot of my warrants are out of the money currently. You can see that the lowest price is this. You can see this, for example. Yeah, okay, why this warrant is worthless currently, like for example, because Hansing futures are traded at 16,000 level, but exercise price is 21,000. there's just big gap between the exercise price and the line futures. So this warrant is worthless. So let's just see whether this warrant's live metrics is available on the website. We still have it lah, but the expiry date. Let's just look at the expiry date of the warrant. But let's say if that warrant is really, really not good for investors to trade, due to various reasons like expiry date, it's going to expire tomorrow or within 5 days, and because the expiry exercise price is way above the, it's like there's huge difference between the exercise price and the futures. Okay, so the live metrics might not be available on our website. Okay, because it's technically not a good warrant for investors to trade. There are no price to show because it's already worthless. It doesn't show any prices. But let's say if you want like to find out more about the live metric, let's say if you cannot see the live metrics on the website, sometimes maybe like some technical error on our website, you can call us directly. But basically all the such warrants listed by Macquarie, we have the live metrics. But for other issuers, that why I cannot tell you.
Yep, that's good to know, Liana. Um, the next question is, where do we get live stream charts for Hang Seng Tech Index?
Okay, live stream charts. That one you have to ask YC because currently, Macquarie, we only provide you the live futures, okay, the live prices of the futures on our homepage. Okay. You can see here on our homepage. This is our homepage. You can see the live futures lah of Hang Seng and Hang Seng Tech. For the chart, currently we'll also display you a 15-minute delay, I believe, on our website. You can go to warrant term, or you can go to underlying chart. I believe you also show you a delay. Yeah. Uh, we also there's a delay as well on our underlying for Hang Seng futures, for example. Uh, you might be able to view it on an external website like TradingView, for example, and also any other external website that I cannot tell lah because it's not within Macquarie, right? So
Yep.
you can ask YC after this. Yeah,
YC
maybe he
say
can
it's
show
from
it to you.
investing.com.
Yeah, investing.com also you can see as well. Yeah, we also see investing.com. Yeah, it's free for Hang Seng futures, for example. But for any other indices, I'm not sure if investing.com is showing. Yeah, you can see this lah futures, the live chart. Yep.
All right. Liana, just now I mentioned that all Macquarie warrants will have the live matrix. So this question from Chin is in relation to this warrant, which is Hang Seng Index HSM. Why is it not listed in the live matrix?
Oh, I see. Okay.
HSM. Yeah.
Okay, let me see.
Warrant
Chin.
code.
Let me see. HSM. Oh my gosh, internet is very slow. I'm sorry about that. So let's just go to Hang Seng first. Let me see. Hang HSM. We don't have HSM.
So it's not.
Oh, it's not listed by Macquarie actually. It's
Oh, it's by
listed by other issuer.
Kenanga.
Yeah, so Mr. Chin, you can ask Kenanga lah, okay?
Yeah.
Mm.
So take a look. This is issued by Kenanga. Okay.
Yep. Okay.
All right. Thanks for clearing the air. Liana, just now you mentioned about rollover, right? So the next
Yeah.
question by CK is do how to roll over from the current month to the next month in the real world.
Oh, okay. So actually, this rollover part is more on the hedging side lah. Okay, because okay, let me just go back to the objective of why such warrants are issued by issuer. Okay, So it's primarily on the is investment for the investment tool purpose. Okay, unlike warrants company warrants that are listed by respective company because it's for their capital raising tool. But for Macquarie, we do not make money from your trading. Okay, when you trade our Hang Seng warrants, we do not or any our warrants, we do not make money from your expenses from your trading expenses. How we make money is from through hedging. Okay, because all our index warrants track their respective futures. So we actually, when you buy and sell our warrant at the same time, okay, we also have a trader that also buy and sell the futures. Okay, so we make profit from buying and hedging and selling the futures. So what we call it as hedging lah. So it's more on the part for our traders that do the hedging to roll over the respective futures as well. But because our Hang Seng warrants or any other index warrants that track the futures, their respective futures, okay, like for example, this one you can see the Hang Seng futures are tracking much, right? Okay, so when you see this, okay, uh I know some people always look at our live metrics lah just to see, okay, when Hang Seng is trading at 16,700, so what would be my price, my Hang Seng warrants trade at the moment, okay. And so on the rollover part, okay, so as I mentioned, uh for Hang Seng, the expiry is been the futures contract is on the monthly basis, okay, and the expiry date for Hang Seng futures is at the month end, so it expires on the 28th. Okay, it doesn't expire on the 29th, it expires on the 28th. So for Macquarie warrants, it will start tracking. Let's say lah, okay, let's say now it's tracking March. So at the end of the month, all our Hang Seng warrants uh will start tracking Hang Seng futures April contract starting on the 27th before the expiry date of the Hang Seng futures March contract. Okay, so we will already start tracking the April expiry. You understand?
Yep.
Uh, Okay, like for example okay, April for example, uh, when it goes to April, it already start tracking the April Hang Seng futures, right? So at the end of the month, when will it start tracking to the new month contract, which is May? So it expire monthly basis at the end of the month, but one day before the calendar month, okay, the last day of calendar month, okay, on the 29th is 29 April is the futures of the expiry date for the Hang Seng futures, okay? So we will start tracking. Usually, we will start tracking one day before the expiry date of the futures. So we will start tracking. So let's say if you see investing.com sometimes, I know people call us sometimes like, hey, why is your warrant already like showing uh different features. So sometimes it's different. Because investing.com is also showing the features as well, but sometimes they also have a slightly different rollover as well. Sometimes you might see that investing.com already showing April, but we are still showing March. So it's slightly different. But how you want to know the exact date when we will start tracking to the new month contract, I always suggest you to look at our Telegram channel, okay? Just to check lah when is the exact date that will already start tracking to the new month contract. Okay, let me
Thanks,
show
Diana,
you the
for
website.
yeah.
Okay, let me show you the website. I hope this clarifies for the Hang Seng, okay? And same goes to the Nikkei and also S&P 500 lah.
Yeah,
Okay,
certainly. I think
one
all
second.
your explanations are very thorough.
Okay, good, good. Okay, I just want to show the Telegram channel lah, whereby we have a Telegram channel that shows you, for
We are not seeing
example,
your
this one.
Telegram yet. Oh, yeah.
Okay, can you see
Yes,
this?
yes, yes. Now
Okay,
we
like
see.
for example,
Yes.
you can see this. Okay, like for example, for our US index warrants, okay, it will start tracking June. Okay, starting 14 March. Okay, why is start tracking starting 14 March? Okay, I mentioned that the US index warrants have the quarterly uh contract, right? Okay, quarterly contract, and they expire every third Friday of the month. And third Friday for March quarterly contract is on the 15th March. So usually for Macquarie warrant, we will always start tracking to the new contract month, okay, one day before the respective futures expiry date. Okay, so this is the explanation lah. 14 March, we will start tracking 14 March, the June contract. And also for the Hang Seng, we will always indicate for everyone. So this is our Telegram channel, Macquarie Warrants Malaysia website. You can see lah all of the rollover that we explain to investors. Okay, like for example, KSCI, for example, we will tell you. I know why people ask this question because of the investing.com sometimes show different contract months. So usually it will always happen at the end of the month. So it will be slightly different. So how you want to know? Then you can either call Macquarie or you can just check our Telegram channel, because we will always post on our rollover so that you will be able to track the right futures month contract.
All right. So if they are
Yeah.
holding the current month warrant, how to roll over the next month in real practice? So there's a follow-up question.
Actually, you do not need to have to roll over. The rollover is just based on our hedging purpose. Like you as a warrant trader, you do not have to roll anything. Okay, so the warrant will just the price will just move as usual depending on the contract month. That's it.
Yeah. So we
Yeah.
have one valid request from Kenny who asked, can all warrant issuer request Bursa to open the trading hours 1 to 2:30 just for the Hang Seng market?
Wow. Okay. You don't like lunch break, ah?
That's
Well,
interesting.
very good, very good. Okay, I understand. That is also a concern for us as well, because Hang Seng, the futures already started trading even during our lunch break, right? So sometimes market is very, very volatile during our lunch break. So you already miss to cut loss. You already miss the profit, right? To take profit during the lunch break sometimes. Sometimes when you see that, oh, Hang Seng futures are moving up, I should have made profit. But too bad. Bursa closed for lunch break. But then suddenly when Bursa is open for the afternoon session, then you don't have time to you see that futures already dropped and you are not able to take profit at the certain level that you think you can actually profit. So actually it's a concern for us as well, which we are making an effort to try to make Bursa to allow us to open trading during lunchtime session. So just stay tuned.
All right. Yeah, I see there are still many questions on my panel, and I see that the YC is diligently answering questions via text. So thank you so much,
Okay.
YC. So I would like to conclude the session by asking just one little questions, because I think time is run out. So that's all the time we have. So let's do one last trivial question by Steven. Is that why put warrant is signified with H instead of P?
Okay, because P has already given to other type of product lah,
Preference
which
shares.
is
Preference
preference
shares.
shares. Yeah, yeah. So Bursa thinks that okay, just give H lah.
Hmm.
Yeah, but P is already given to other, which is
Yeah. So
preference shares.
if you see a stock code that end with dash P something, not put warrant, okay? This is not
Yeah,
put
that's not
warrant,
put
okay?
warrant. That's correct. Yep, yep.
All right, cool. So thank you so much, Liana, for sharing with us, what exactly are warrants and how do we use the tools on malaysiawarrants.com.my to help us to make informed trading decisions about trading warrants. All right, thank you so much, Liana. And for those questions that remain unanswered, I guess Macquarie will come back again to talk about those slides that we are not able to address just now for the next sessions happening in May. So stay tuned. Watch this space. We'll let you know more about the next webinar with Macquarie. All right. So thank you so much to both speakers for sharing with us the market outlook for the US, the Japan and the Hong Kong market from a chart perspective. And thank you so much, Liana, for sharing with us how do we use structured warrants by Macquarie to gain exposure to these markets. And what I want to highlight that if you want to gain exposure to the Japanese market without leaving Bursa Malaysia, Macquarie warrants is the only avenue at the moment. All right. So thank you so much to both speakers. I hope that you have gained enormous value for this session. Hope to see you both again in our next session. All right. Bye, everybody.
Thank you
Thanks,
so
YC.
much.
Thanks, Liana.
Thank you. Thank you, everyone.